Did you know you can get a first-time home buyer loan with as little as $1,000 down? In fact, some loans can be as low as $500 down, which is a shocking $99,500 less than the typical 20% down payment. This video is designed to help first-time home buyers understand their loan options and navigate the mortgage planning process. By the end of this video, you will learn how to qualify for a first-time home buyer loan, the different types of loan programs available, how to navigate the home loan process, and how to get pre-approved for a loan. What is a first-time home buyer loan? A first-time home buyer loan is a type of mortgage loan designed for borrowers who are purchasing their first home. These loans often have more lenient credit score requirements and lower down payment options, such as 3% or 5% down. For example, with a $200,000 home, a 3% down payment would be $6,000. Types of first-time home buyer loan programs. There are several types of first-time home buyer loan programs available, including FHA loans, VA loans, and USDA loans. FHA loans, for example, require a down payment of as little as 3.5% and have more lenient credit score requirements. VA loans, on the other hand, are available to eligible veterans and active duty military personnel and do not require a down payment. Qualifying for a first-time home buyer loan. To qualify for a first-time home buyer loan, you will typically need to meet certain credit score and income requirements. For example, FHA loans require a credit score of at least 580, while VA loans do not have a minimum credit score requirement. You will also need to provide documentation of your income and employment history, such as pay stubs and W-2 forms. Navigating the home loan process. The home loan process can be complex and time-consuming, but it's essential to understand the different steps involved. First, you will need to get pre-approved for a loan, which typically takes 1 to 3 days. Then, you will need to find a home and make an offer, which can take several weeks or even months. Finally, you will need to close on the loan, which typically takes 30 to 60 days. Benefits and drawbacks of different mortgage loan options. Different mortgage loan options have different benefits and drawbacks. For example, a 30-year fixed-rate loan may have a lower monthly payment, but you will pay more in interest over the life of the loan. A 15-year fixed-rate loan, on the other hand, may have a higher monthly payment, but you will pay less in interest and own your home sooner. If you're ready to start the home buying process, click the link in our description to get pre-approved for a first-time home buyer loan today. Don't wait, interest rates are changing all the time, and you don't want to miss out on a great deal. Get started now and take the first step towards owning your dream home.